Good morning. This slide shows you what's going on in the real estate market in the Silicon Valley area. Here's your micro market areas. These are the key indexes. This is what we'll be going over. The color code indicates a hot marketplace versus a cool marketplace. This is what you'll understand at the end. DUIs is days of unsold inventory. DOM is days on the market. This is the 75th percentile. That's sort of the long side of the normal sellers on how long it's taking to sell their properties. This is price reductions that the seller takes before the offer comes in. This is the buyer's overbidding or underbidding. This is the frequency of the buyer's overbids. This is the appreciation since April 1st, 2015 through December 31st, 2015. It's those 9 months. That's my base. And then the appreciation since. And then finally, the median sold price in each area. That's what you'll be seeing in detail as we'll go through. This is the micro market areas. We do a lot of it on the county level through the presentation. This is the big takeaway, in my opinion. We're basically having record low volumes of offers accepted in Silicon Valley. What am I talking about, record low volumes? Well, it's basically only about 2/3, 70% of the median over the last 10 years. If you look at what we typically sell over the last 10 years, we're only selling about 68% of that normal volume. We're only selling about 75% of the previous 10-year lows. You take the lowest number of transactions we had in a 10-year period of time, and we're only selling about 3/4 of that number of homes. And then for those that say, well, the last 10 years have been very robust years, and let's look at a longer time frame, jump back over here to the 25-year level, and you can see that you're selling only about 80% of the homes, the fewest number of homes that we've ever sold in the last 25 years. And unfortunately, volume of transactions of homes indicates the strength of the marketplace. Those are the buyers that have to make the 30-year commitment on a mortgage and are putting their money on the line and their credit on the line. And if they're not buying, the market isn't very strong. And that's going to be sort of completely opposite of everything else, because the other thing that's happening, and I'm going to try to put together a graph to show this for next week, is the sellers are simply not coming on the marketplace. With no sellers, the market's actually starting to be a little hot. And this is what I'm talking about. You're not selling any homes, but the few homes that are selling very rapidly. I mean, this is not as spread as it was during the boom days, but look at these days of unsold inventory. We're getting down where a vast number of them are somewhere in the 20s, 19 days in Milpitas and Berryessa area. These are very respectable days. Normally what I say is anything between about 40 and 80 days is a balanced marketplace where the buyer and the seller have an equal footing. When you're below this, below 40 days of unsold inventory, the sellers have the upper hand. Right now, the sellers are actually having, the few sellers that are on the marketplace are having the upper hand because there are no competition for them. You know, yes, there's a couple exceptions. The San Mateo County Coast at 91 days, the expensive areas in Menlo Park and Atherton at 84 days, and it doesn't go saturated until 145. And yes, we've had times when days of unsold inventory were 250. Having the slowest marketplace being 91 days of unsold inventory is an aggressive marketplace. Now we're moving on to days on the market. What this is doing is looking at a fairly new benchmark. I've only been following it for a couple of weeks, but I think it's valuable. This sort of is looking at what the seller that's somewhat reasonable, but on the long side of reasonable, sort of the longest of the typical sellers are taking to sell their property, the 75th percentile. And so here, if you're from under 45 days to sell your property, that's sort of an okay marketplace to a hot marketplace. If you're above 45, that's starting to take a long period of time. So just look at these areas, and again, they're pretty reasonable. In Milpitas, the long sellers taking 2 weeks to sell their property. That's not the quick seller, that's not the median seller, that's the 75th percentile. So only 25% of the sellers are taking longer than 14 days to sell their house in the Milpitas area. In Campbell, it's only 21 days. In Cupertino, it's 12 days. That's a pretty aggressive marketplace. I don't think we've ever been in a situation like this where you have no buyers, but you have no sellers, causing a hot marketplace. Now we're looking at asking price reductions. You see this at the properties that are selling right now, so you don't have to wait for the escrows to close, which is why I've introduced it. It's how much is the typical seller reducing their price, the average seller reducing their price when they get the offer accepted. In Milpitas, they're holding firm at 99.7%, 0.3% of price reduction. That means a couple sellers reducing their price a little bit. Campbell is pretty strong. And again, this is a fairly new number. I might play around with the color coding a little bit, because it seems like it's out of position, but again, it's relative, so it gives you an idea. The areas that are reddest are the least price reductions. The areas that are the bluest are the biggest. So as you look at Saratoga Las Gatos, you're looking at a discount of 2.4%. That's a fair amount of discount from the difference between the offer price, the sold price, and the list price, because we don't see those kinds of discounts. I'm not sure that's that big of a discount for the seller reducing their own price if they start too high. So I think that's where I have to make the adjustment, and I'll try to do that for next week. This is looking at the magnitude of overbidding, how much overbidding there is. This we have to wait for escrows to close. So this is a lagging indicator. So this is telling us where the market was 5 weeks ago. So I suspect that this is going to become a lot redder in the near future as buyers are sensing that fast marketplace and the sellers sense that fast marketplace. Now, if the market gets too out of line, I fully expect the sellers that aren't coming on the market will come on the marketplace, and that will slow the market back down again. So I don't think the market's going to take off, but we have this sort of contradiction where you have a fast-paced marketplace, but very little activity. This is the frequency of overbidding. How common is overbidding? So overbidding is not very common, but again, this lags behind by 5 weeks, so we need the close of escrow dates. This is the appreciation. This is over the 2015 level. So this is April 1st of 2015 through December 31st, 2015. That 9-month period of time was my base. Then I'm looking at what's happened to prices since then. And, it's sort of interesting. Some of the affordable areas have the highest appreciation. And then, you come down to some of the expensive areas and the appreciation is lower. Now, the exception to that is Atherton Menlo Park. They actually have, I think, the highest appreciation right now at 175%. So their prices have almost doubled since 2015. I suspect that just happens to be what properties have sold recently, because you can see right next door in Palo Alto, it's pretty blue, and this Bay Cities is pretty blue. For this to be bright red sort of stands out, and you can see the bright red is mostly in the more affordable areas, but you're also seeing the bright red down in Saratoga Las Gatos. This is a sold price, so this is simply not telling you how hot the market is, but where you can find more affordable properties. You go to the darker blue areas and you get more affordable areas, and you go to the red areas, you get more expensive areas. And just FYI, this area up here is Oakland, and then this area up here is Alameda and Berkeley. Even though they're mostly not on the chart, their numbers are down here, and you can sneak up there and see it. So Oakland is this blue down here, and then Alameda and Berkeley is the island that you're seeing, the southern tip. We're looking at active inventory. You can see that normally you have inventory up here, and this is where we are. You're having inventory that's very close to the red number. So we're having close to record low inventory. We're not there, but you're close, because this is really the 90 percentile, but you're way below the level of inventory you'd expect to be. Here's the number of offers accepted. Here you can see that the blue up here is the least you'd expect it to be. Look how rapidly it climbs at this time of the year. And yes, it's only 1 week, but notice how there's a little bit of a break here. There's a potential that this is going to roll over and we're going to stop selling a bunch of homes. This difference may get greater. It's something to keep an eye on. One data point doesn't make a trend. That's one of the reasons I look at data so often. I firmly believe you need 3 data points to start indicating a trend. This is just a red flag that there's something going on. It could be a 1-week perturbation. It could be an indication that now we've reached the most buyers we're going to have, and this is going to level off. And if that does, then your inventory will grow and your days of unsold inventory will increase fairly quickly. And that's sort of what I almost expect to happen, but there's no way to know. This market is so bizarre right now. This is looking at the number of closed sales. Now this lags behind because you have to wait for the closings. They're going to just go up. You can see that we're way below the light blue, which is the least number of transactions you'd expect. The black is what you would expect, and the red is the most you'd expect. So clearly we're way down on the volume of transactions, and we have been way down on the volume of transactions ever since about May 1st of 2020. 2022. So almost a year now of way below normal volume of transactions. This is looking at days on sold inventory, and I didn't adjust that line, but it came down a little bit here. But here, the purple and the black are basically on top of one another. From days on sold inventory, from the speed of the marketplace, we're basically having a completely normal marketplace, which, it sort of doesn't make any sense with the low volume of transactions. This is the median days on the market. I really don't like it because it block the jumps. It's too judgmental and it's too stable of an index. That's why I introduced, and I like this much better. It's the 75th percentile of days on marketplace. It's the way I look at it, it's the long side of what the typical seller is going to do. We're up here and we're right on top of the blue, thin blue. So we're basically having the longest time frame that you'd expect, where you'd expect to be down here somewhere around 37 days maybe. So you're up here at basically 49, 12 days longer. It's taking 2 weeks longer, but still for the 3-county area, for 75% of the sellers to sell their property in 49 days, that's only 7 weeks. I think that's fairly good. And down here is the fastest marketplace we've had. So we've had it in where sellers are selling their properties in a week and a half, which is basically 2 weekends. Here's the largest asking price reductions. You can see that we're taking bigger reductions than the most you'd expect. The biggest reduction you'd expect is up here at 95%, and we're down here at 94%. Just shy of 94%. The best we were was 100%, which means the sellers were taking no discount, and even the median was at 100. That's why I don't look at 100 percentile, and in this case, I'm looking at the sellers that take the biggest discount. I think I'm going to adjust this to look at the 75th percentile, because I think I've done that analysis, and I think the 75th percentile is a little nicer because these climbs are not so rapidly and the drops aren't so significant. They're a little more shallow. Here's the asking price to list price over the 10 years. Here's where you'd expect it to be, the black. The blue is the least you'd expect it to be. And we're down here at the purple. And it's noteworthy, again, just one data point. You can see this little elbow, and an elbow doesn't determine, a trend change. But that's saying that the sellers that have accepted their offer in the past week have taken bigger price reductions than the people that took it the previous week. And this is looking back over a 5-week period of time. So it's basically saying the sellers that took a discount between week number 0 and 5 are taking a bigger discount than those that took it between 1 and 6. This is looking at the median overbidding magnitude, and this is typical. So we're right here at 100%. Typically, we're somewhere approaching 102%. Again, a little bit less over aggressive, but that is probably going to change. This is average overbidding, and again, you can see the purple line is below all the 3 lines where you are your bounds. These are basically your bounds of expectation. The black is where you'd expect the data to be. The blue is the lowest you'd expect it to be, and the red is the highest you'd expect it to be. And we're on the outside, on the low side. So you never expect the market to be this bad. Just like in 2021 and 2022, we would never have expected the market to be that good. Here's the frequency of overbidding, same exact pattern. We're below the lowest level you'd expect. This is the sold price, so people can see it. I like the next slide a little bit better. This is on logarithmic scale, so you can see here as your price goes up, the lines get closer together, but you can see your rate of appreciation. And basically, when you're above the freehand drawn line, you'd expect downward pressure on pricing. When you're below, you'd expect upward pressure on pricing. And you can see the price has turned, and the properties that have closed in the last couple of weeks have been higher. And I do anticipate that to continue. Now you're looking at the sale price to list price distribution. We're starting off a year ago. We're going to look back a month at a time. So 12 months, 11 months, 10 months, and then a week at a time when we get to 12 weeks. The red dashed line up here is the best week we ever had, which was just earlier this year, last year, March 29th of 2022. This is the worst week we ever had, which was November 30th of 2001 after the World Trade Center. The purple line down here is the current week data. Current week data ends on midnight on Monday. I do what I call plus 1 week data, and I use plus 1 week data on all the presentation. Plus 1 week data goes through midnight last night. The reason I call it plus 1 week data is I use a real estate fiscal year of March 1st through February 26th, because there's one extra day than number of weeks every year. If you had an even number of weeks, we'd have 364 days in a year. We have 365, and then leap year, we have a 366. So I've combined those into one discontinuity. I jumped from February 21st, not to February 28th, but all the way to March the 1st. And the plus 1 week just gets you up to current data, so we're not discussing stale data. The week that we're discussing 12 months ago is the bold line here. The red up arrow indicates an improving marketplace. If the blue line was bold, that would indicate we were plateaued. If it was only a blue line, that would be decreasing marketplace. As we step through this, you can see that's a huge increase. Now you basically are at the same level, so plateau. Now you're stepping down 8 months ago. 7 months ago, another huge decrease, another big decrease. 6 months ago, a smaller decrease. 5 months ago, now you're at a plateau. 4 months ago, 3 months ago, same level. Now you're 12 weeks, 11 weeks, 10, 9, and now you're going down again, down, down. So that was almost a plateau. There's my plateau. Plateau, down again, plateau, I think. Plateau, I saw it up a little bit. That was actually up in my opinion. So the arrows are not. And now here's your current, and my current is not showing. That's disappointing because I saw it flagged up here and I saw it before. I'll see if I can't bring that back up at the very end because I don't think I'll have time to do it. The jump up for plus 1 week was actually fairly significant, and I saw it earlier, so I don't know why it didn't display. Here's the chart we started with. So days on sold inventory is the key indicator. You can see in all the micro market areas in Silicon Valley, we're basically in a red hot seller's marketplace. You know, the two standout exceptions are San Mateo County Coast and the expensive areas in San Mateo County, but everybody else is basically a very strong marketplace. You know, if you want to throw in Oakland as a third exception, that I wouldn't argue with that, but these are pretty impressive numbers. I think these numbers are pretty long. To say that the sort of the typical long time for a seller to be on the marketplace is basically under 30 days, that's pretty aggressive when you look at these numbers. You know, that's basically a month for the slow seller to sell their property. Here's your price reductions. Again, I think I want to make a slight adjustment for the blue. The reason for that is sellers take bigger discounts when they're trying to attract the buyers than when they have an offer in hand. And I think I used the same scale. So I think that was a logic error. This is the overbidding, very little overbidding, but now remember, and I did update that R to a P, that's supposed to be sale price. Remember, these are the discounts at the time the escrow's offers were negotiated, but it aren't revealed until escrow closes. So these are delayed by 5 weeks roughly. Same with the frequency of overbidding. So I expect both of these numbers columns to get redder in the future. Here's the appreciation. Now, just because an area has had a high appreciation over the last 10 years doesn't mean it's going to have high appreciation going in the forward. I think the reason the areas that are showing the biggest appreciation now are the remote working. These are areas that are further commute that became more desirable with remote working and therefore had a higher appreciation. And for the most part, the areas that had the least commute had the lowest appreciation in the recent years, which gave them the overall lowest appreciation. Just something to keep in mind. And then this is your color scheme for the area. So you can quickly find out what your price range is. And when we talk about price, I also have the 10 and 90 percentile, so you know the sandwich. This is only the median. Here's the days on sold inventory over time, and you can see that the right-hand column is the reddest of them all, and that's the current numbers. That's the hottest marketplace we've been in. If you come back here, you can see how much cooler it was. Yes, Alameda County wasn't white. I didn't have the data. The first week I had data was here. Here's looking at the number of sort of the key indicators of the marketplace. The number of new listings is up across the board. The active listings is basically flat. I mean, Santa Clara County only has 533 single-family homes available for sale. That's not very many. The offers accepted in 657, and that's past 5 weeks. So you have less than a 5-week weeks supply of inventory. The number of offers accepted, you can see, is increasing across the board. DUI is decreasing across the board, with Alameda County doing a 10-day decrease. Remember, I typically say if you're seeing a 5-day decrease in a week, that's a pretty significant change. So 3.4 comes pretty close. The whole Bay Area was right at that threshold of 5. Here's your closings. The median days on the market for closed transactions was 13 days for the Silicon Valley. The breakdown is from 12 to 14 days. You can see the days on market for the 75th percentile, and these are for closing. So this is where the market was 5 weeks ago. So this is sort of allows you to sense where the market was. 45 days, 48 days. So the market's changed dramatically because that 48 days is probably closer to 28 days now. Discount was 1.1%, and I think I don't remember. I think I said it was 0.4%. So a significant drop in the amount of discount in the asking price. Overbid is 108%. We don't have that compared to the current appreciation in the price range. And I'm going to point out, and we'll see it later, San Mateo County is almost at 1.9 million and 1.850. It was down at 1.480 just about 4 weeks ago, I guess now. So it's jumped up dramatically. I don't think that's reflective of what's happened to property values. I think that's the reflective of the properties that happen to be selling the price. I don't expect anyone to look at this, but this is where I get the low volume of sales from. So you can see quickly the blue is the lowest number. So we had a lot of low in 2007 and 2008, but then also in 2020 with the pandemic. And then the latter part of 2022, the light pale is the second lowest in here, basically honorable mentions. This is where we're having the lowest number of transactions all the way back. And this only goes back to 2007. Otherwise it'd be too hard to read. But I had the data going back to 1998, and to be having the lowest number of transactions in that time frame is significant in my book. This is trying to look at what's happening in the marketplace, but this is February data, which isn't available because February is a short month until March the 8th. You need 35 days, and I start on the 1st of the month, but it gives you some idea where we are. 528 homes on the marketplace. That's basically a fairly low number. I'd expect it to increase some over the next 2 weeks, but will it catch and be up as high as some of these other numbers? Probably not. So we'll probably going to have on the low side of normal inventory. DUI at 42. Now that's actually a fairly high number compared to these numbers in recent years, and you have to keep that in mind. I talk about 42 days being a pretty aggressive marketplace, and it is. And by the way, this is single family homes in Santa Clara County only. I've changed out of Silicon Valley for this particular graph because I don't have Silicon Valley data going back over the years, and I might be able to reverse engineer some of the data, and maybe I will do that to keep apples and apples comparison. But 43 days on sold inventory is actually a fairly slow marketplace for this time of the year, and I think that's the real takeaway. And a more significant takeaway is the number of transactions, 432 in the last 5 weeks. You'd expect that number to be quite a bit higher. I do expect that number to go up, but I think that what we have is that oxymoron going on where we have very few sellers in a slow marketplace, and therefore we have very limited inventory, and even though we have very few buyers. And then coming down to sale price, you can see that you're just shy of 99 percentile. Only 30% of the sellers are getting more than their asking price. You can see that the median price is 1.5 basically, and you were up significantly higher last year, and we're basically getting back to the levels we were as early as 2020. Here's a comparison, and I guess I'm a little off the table for those that want to compare apples and apples. It's showing January data. I don't like January data at this point because you're looking too far in the rearview mirror. I want to be on the leading edge. Now what we're looking at is active listings of the 3 counties. 3 counties make up Silicon Valley: Santa Clara County, San Mateo County, Alameda County in the gray. And what are they doing as far as their inventory? And you can see they're all doing roughly the same thing. You can see where they are for past years. This is the offers accepted. You can see that they're all following the same trend, but notice how they've all leveled off here. Yes, it was a holiday weekend, which is going to impact it. and the weather wasn't the best. So it could be as simple as that versus a shift in the marketplace. And that's why 1 week data is sort of dangerous. Here's your plummeting of your days on sold inventory. And again, because the lower number of sales, your DUI sort of leveled off. Santa Clara, it looks like it's doing the biggest non-leveling off. Alameda County right here leveled off because it came out almost straight over, and San Mateo County leveled off. So this is the 75th percentile. So you can see Alameda County actually did a little reverse and bumped up. San Mateo County in the orange came down, Santa Clara came down. But again, it's showing the normal trends. You can come back here and see where we normally are. Quickly, we can get down here the last couple of years, down around 10 days. I don't think we'll get there, but there's no way to know. This is median days on the market just for completeness, but I'll skip over that. This is the list price reductions. So you can see that, the amount of reductions is decreasing now. We're getting closer to 100%, which is up here. 100% is no discounts. So keep in mind that the average discount existed even in the hot marketplace, because all it takes is one seller overpricing their property and the discount shows up. It's also interesting that we were over 100%. So that means that sellers were actually raising their price. That happens on two things. One, where an agent, and I try to catch all of these, and there are a fair number, where an agent lists the property at a wrong price and has to change the price. So it's more of a correction, but the computer keeps that incorrect price as the original price, which is why I've now downloaded the data and correct data so that we get more accurate numbers. The other is where the listing agent raises the price when you have an overbid, worried about what the appraiser will think of an overbid. Here's your magnitude of overbidding. You can see the abrupt turnaround in the last couple of weeks, and that's basically the holidays going in. At the end of the holidays, you do not have the overbidding. The buyers come out of the woodwork before the sellers do and put the demand on the marketplace. And that's why we typically have appreciation in the first quarter of every year minus a month. Here's the frequency of overbidding, the same thing, basically up fairly significantly. They're all following the same pattern. This is looking at sold price. Here, look at the orange, look at San Mateo County. I mean, you were somewhere around 1.8 million. You went all the way down to 1,480, and now you're back up to 1,000,080 again. That's just a huge fluctuation. I think that's the biggest dip. You had close to that kind of a dip back here, also at the end of the year holidays. One of the things that I will say is it appears to me that the dip for the end of the year holiday and pricing in San Mateo County appears to be slightly greater magnitude than in Santa Clara County. Look at this year. On the downward side, it looked to be the same, but then on the upward side, Santa Clara County only went up a little. San Mateo County went up huge. And yes, it's a higher price, so it's hard to judge. That's just a visual observation. And here it is on logarithmic scale paper. Now you can compare the Santa Clara increase to San Mateo. San Mateo County is probably double the increase. Here they're about the same size. Here San Mateo would be a little bit bigger. Here they were sort of washed out, sort of the same. So, some years, most years it's the same, and that's what I would have expected. But there's been a few years, and this looks like one of those years, where the impact for the holidays is going to be greater in San Mateo County. And I don't know why this is clearly wrong index. The blue is clearly Santa Clara County. The orange is clearly San Mateo County, and the gray is clearly Alameda County. You can tell just from the pricing. I do not know why this index is done incorrect. Back to a correct index. This is showing the appreciation, and again, you can see the huge drop in the appreciation in San Mateo County and the huge recovery. That's been talking about Silicon Valley, which is Santa Clara County, San Mateo County, Alameda County. That's on slides 2 through 63, which are not up yet. They'll be up probably right around 3 o'clock this afternoon. 3 o'clock is typically a reasonable estimate of when I get the video edited. We've been talking about in week number 8. We're now going to go talking about the Greater Bay Area, which adds in San Francisco and Marin, adds in Sonoma, Napa, Solano, and Contra Costa County, the North Bay, the Central Valley of San Joaquin and Sacramento, and the Central Coast of Santa Cruz and Monterey. And those are on slides 66 through 79. Also, what we've been doing is the green is the root URL. You add 2023 to get to the live presentations 9 o'clock Saturday morning. You add in the letter H for handout 2023-02-25 for today's handout. If you want a specific episode, you put in the month, year, date code after the green URL, and the green root URL takes you to the YouTube archive. Does anyone have any questions that they want to yell out at me? Not hearing anybody, I will proceed. Now what we're looking at is the breakdown of the 13 counties in the Greater Bay Area. We have the 3 counties at the top that make up Silicon Valley. Then you have the 2 additional regions in the Bay Area, and then you have the Bay Area total, which are the 9 counties that touch the Bay. Then I add in the Central Valley and the Central Coast. You can start looking across the board at your days of unsold inventory. They're all very respectable. The highest number I'm seeing is basically under 60 days for a county. The number of offers, the median days on the market, the number I like better, the 75th percentile. So you can see that, up in Sonoma, the area there is still slow, because to take 3 months to sell their property is got to be a little bit frustrating for the seller. Your seller amount of discounts, the discounts at the time the offer comes in, triggered by the buyer, the frequency of overbidding, the percentile. I like having the sandwich. The middle number is the median price, and the number to the left is the 10 percentile, the lowest, and the number to the right is the 90 percentile, the most expensive in the given area. The reason these were highlighted is for a while there, all 4 counties, being Santa Clara, San Mateo, San Francisco, and Marin, were the same price. San Mateo came down and shot back up, but the other 3 are still fairly close together. So that's noteworthy to realize that we're so close together in price. Normally, I would have expected San Francisco and Marin to be more expensive, and San Mateo. And San Mateo has been the most expensive county, which is sort of not what I would have expected, and I haven't followed that. And I did not get to come back and find out why my appreciation numbers are not coming onto this table. This is looking at the inventory of the 5 regions, Santa Clara being the purple in the middle. The Central Valley and the North Bay are your big volumes. Your Central Coast and your San Mateo are the 2 smaller regions. This has nothing to do with the speed of the market. It's just basically the size, how many homes are in the area. Now what we're looking at is number of offers accepted. You can see the number of offers accepted is going up in all of them. You can see again the regions are grouped by their size. Now we're looking at the number of closed transactions. You can see that it's just started to come up a little bit. The San Mateo and the Central Coast are still going down. Days of unsold inventory plummeting across the board like you'd expect. You can go back in there and see it. It's just lower than numbers that are lower than I would have expected for the lack of transactions. Median days on market, again, I don't really like this, but I do like this one, the 75th percentile. You can see the climb, you can see the reversal coming down, so it's starting to take the sellers less and less time to sell their properties. This is their ask price reductions. Again, you can see the amount of the seller reducing their own asking price is increasing or decreasing, getting closer to 100%. This is the average reduction. This is the magnitude, sale price to list price. So you can see that some of the areas, basically Silicon Valley and San Francisco Marin, are getting more than 100% of their asking price. We were down in Silicon Valley below 100%, but now we're almost at 102%. The other 3 regions are still below 100%. The frequency of overbidding, again, Silicon Valley and San Francisco Marin is leading the pack with the best overbidding from the seller's point of view. This is the total appreciation. And it is noteworthy that San Francisco really fell out, and Marin, and I think that has to do with remote working. And you can see the fallout basically started to occur right here, right at the announcement of the pandemic in March of 2020. And yes, it takes a month or 2 for it to show up, but then boom, it dropped down significantly in value. This is the smallest overbidding, the amount of the smallest overbidding. So you take the 10% with the least amount of overbidding and you plot that. This is the median overbidding, so the typical overbidding, and then this is the 90 percentile. So that gives you the sandwich, the range at which the buyers are overbidding in a given region. And with that, I'm back to the summary, so I'm available for any questions. And let's see if anybody's got any questions for me. No unmuted mic. I think I got that finished. And see everybody next week. Again, 9 o'clock Saturday morning. The root URL takes you to the YouTube archive. You add 2023 and you get to the presentation. And I would appreciate more people. I don't like to just lecture. I like to have people throw out questions. Please consider that. Bye now.